Today, Ford hit with a $1.2 billion lawsuit over misreported mile per gallon ratings, which is quite hilarious as they were seen making fun of the Cybertruck, where Elon Musk, well, was recently seen driving over some pylons at a restaurant, which we're going to take a look at as well. And if I can share some insight, there's a video of a gentleman that decided to go all in on Tesla, ladies and gentlemen, and I'm going to break down my thoughts on this. And on top of that, I'm going to give you a few tips and tricks on looking at a balance sheet like Tesla's to see if it's actually worth any real value underneath all the numbers. So this is going to be really fun to compare it to a bunch of different companies, and I look so forward to breaking all of this down for you. So let's just jump right in. Welcome back, my passive income investors alike. Tonight I decided that I wanted to put a little bit of a montage together, some of the interesting news that hasn't been overly highlighted. Some of it has, sure, but some of it like this is a little unreported, and I briefly mentioned this in the past, but I want to just talk really quickly to start off with is the big Ford lawsuit. Now, it says Ford has been slapped with a federal lawsuit over allegations that it misrepresented the fuel economy rating on its 2018 and 2019 F-150 pickup, the #1 sold truck in, I think, North America. The lawsuit claims that Ford installed a mileage cheat device that would display overly optimistic economy figures to owners as they drove. It also applies to the recently returned to the U.S. Ranger. I'm not sure what that means there, but this particular lawsuit filed Monday by the Seattle law firm Higgins Berman isn't the first fuel economy-based lawsuit to be leveled at the blue oval for the Ranger. Other suits have made similar claims. And the Department of Justice is also investigating if there is a criminal case to be answered. The new lawsuit is seeking damages of the amount of $1.2 billion, according to the Detroit Free Press, alleging that the misrepresented mileage could have cost owners somewhere in the neighborhood of $2,000 per year. If that doesn't say enough, ladies and gentlemen, about your ICE vehicles, I remember watching a video. If you're a big Tesla fan, you probably watch Hyperchange. If you don't, go YouTube Hyperchange, check it out. He was sitting in one of the newest like F-150s and like GMs and stuff, and he was making fun about how they're like grandma vehicles because there's so many fun little buttons to push.
Most interesting thing about this LA Auto Show so far is how many legacy ICE cars there are without autonomy. Like, I just feel like I'm like in my grandma's car right now. Buttons, buttons, knobs, button.
So leading in from that news, guys, and that big, kind of hilarious slap to the ICE vehicles, let's take a quick peek at Elon Musk here, at Naboo restaurant, making a big scene here. I feel like this was all, put together, orchestrated, might I say, because it's just too perfect. You see him here being like, no, you guys can leave. I'm going to valet my own truck, my own vehicle. And then, as he takes off, we get this beautiful shot. Are you ready for it? Oh, wait for it. Wait for it. It's right here, ladies and gentlemen. This is so friggin' hilarious. Boom! He's just going to run right over that. Sorry, that seemed a little laggy. Let me go back and give you guys a clear shot so you can get that. Boom! I wonder why that's so glitchy. Now it's making me think that it was edited in. But either way, just some funny little stuff that was coming in from TMZ lately. If you didn't catch it, Elon Musk driving over a pylon after basically telling the valet to get out of there. Thought it was quite funny. And in the same highlight of that news, we also had a video come out by one that's kind of going semi-viral here. So I want to talk about why I'm all in on Tesla stock. Ladies, gentlemen, you should come check this video out. It's by a YouTuber named Solving the Money Problem. And it's just a really fascinating take on all his bull cases on why he's all in on Tesla. And I just want to say, as a passive income investor, and in a second, I want to teach you a trick because we're going to look at the fundamentals of a company and kind of unveil the balance sheet a little bit with something that'll help you into the future. I just want to say it's not smart to go all in on anything. So let's say somebody went all in on a car, okay? Let's just say you go all in on, like, you put your life savings into this Tesla car and then boom, you crash it, right? All of a sudden, right off, it's gone with your wealth and whatever the insurance is willing to pay out, which will be substantially less. To be honest, it's pretty hard for a decent company to go to 100% bankruptcy, but we have to understand we do not ever want to exceed the risk like of something dropping 50% for the next 10 years that doesn't pay a dividend. Like that could be Tesla in the future. We do not know. Obviously, there's a lot of speculative value. I am bullish on Tesla. I do own a fair amount of shares, about $5,000 worth, and I plan on buying a few more. I'm not going to go on any farther about diversifying your portfolio. That should just be common sense, and I would ask him to deleverage. I really suggest you guys watch this video. He's got a decent chunk of change. So he says 80% of his entire portfolio is in Tesla alone. But for a quick little balance sheet tip here, guys, if you go into, say, Yahoo Finance, whatever platform you're using, open up Tesla, and I'm going to show you this compared to a few other companies as a bit of a cheat glitch, I like to call it. It's my little nook and cranny, that cherry on top of the cake. It's usually the first thing I take a look at in a balance sheet, and I find it's something that people should pay attention to when you want to know if a company is actually worth something. So go show you guys, if you're new to this, let's just make this real easy. So take a look here. We're going to go thousands. So there's 100,000, 100 million, 29 billion. Very good, children. Let's keep going. So if we take total assets of $29 billion, guys, and we go minus it from the total liabilities of 23.9, so we can just say that's what, about 24 billion. So if we just minus that 29 from that 24, we're going to be left with about 5, give or take, billion dollars is the underlying asset if Tesla liquidates everything they have today. So as we can see, Tesla's continuing to burn its capital into restructuring and building new pieces of its company because it's currently growing. So we can see that it actually has negative revenue, but yet its earnings are exploding substantially. So we can tell Tesla's a straight up growth company if we go into the income statement or even the cash flow. As we can see, from 2015, we've gone from about 4 billion in revenue to a whopping 21 billion by 2018, and we're exceeding that coming into 2019 here, which is crazy to consider. Think about that for a second, guys. Could you imagine going from making 4 billion in a year to 2 years later to be making like $20 billion, like doubling revenues from 2017 to 2018? Absolutely incredible stuff. I don't think you could go terribly wrong buying Tesla. It's going to be pretty hard at this point for this company to go bankrupt, and I think people keep forgetting it. It really reminds me of what Amazon used to be. I'm not saying that this company is undervalued by any means, as if we take the underlying asset value of 5 billion and we compare it to its market capitalization, which is the total value of the company, children, we get 64.83 billion. And if 5 billion, oh my goodness, guys, that's nowhere near close to the current market cap. Now, you could compare its value to the growing revenue, though. So you have to give this different metrics of comparison. But let me show you why, if you're like a dividend investor, because you can't really use these metrics for growth stocks like Tesla. Let me show you where this would be practical. First of all, it's very important you avoid companies at all cost that have a negative book value. That means they're completely reliant on cash flow, and if things start getting bad, they might not be able to pay their debts back. So if we go into a company, I actually used to own this company, and this is the actual reason I sold this company. It's called Brookfield Real Estate Services. BRE, ladies and gentlemen. They just broker real estate deals. They're agents, and you take a small commission and a royalty. And as we can take a look, revenue and earnings are actually up, which is quite incredible, but the company's been losing value, and that's because of the debt loads, ladies and gentlemen. So let me go, we're in the balance sheet here, so let's do the same little metric I just taught you. So we go total assets, and this should be in the thousands as well. Yes, correct. So we're looking at very much smaller numbers. So total current assets, ladies and gentlemen, we got 95 million. So we got to remember, thousands, millions, 95 million. And if we minus that from the total liabilities, we're looking at 122 million. So it doesn't minus out, does it? There's no positive minus there. So total assets of 95 minus 122 leaves us with about $30 million of debt, which is pretty staggering. So if we take a look at their cash flows, let's see if this is within reason. We can see if they're $30 million in debt. Well, they're bringing in about $40 million consistently year over year. And it actually looks like they've been, pretty much flat or actually hitting new lows in 2016 on revenue, which is not good. But you can go over this. It's just a really simple metric that really helps you know what's going on. So I want to show you a company now that's one of my favorite companies. I currently have bought this and loaded the boat on this guy this year. And we all know that's British American Tobacco, ticker symbol BTI. If we go into the balance sheet and we take a quick peek at the same metric, and I want to show you where you're going to be getting a deal here. Because what we want to do is usually compare this to a like what the market capitalization on it is. Because if we do, then we can see how much we're paying for it versus its underlying assets just at the market cap value. Because you got to remember, market cap is what you're paying for the total value if you were to buy the entire company today, one share at a time, ladies and gentlemen. So Let's take a look at this company because I love this company and this is why I'm buying it right here. So if we take a look at the total assets again, children, we got 146 billion, 342 million. And if we go ahead and take that and minus it from the total liabilities of 80 billion, I think we're left with a rough $60 billion, give or take 65 billion bucks. And if we go into the actual market capitalization, we can see its current value is 90 billion. So that's really only, 15, 20 billion away from its raw value with all of its total assets, real estate, factories, cash, whatever it has laying around, just what its base asset value is. Think about how staggering that is for a company that pays an 8.2% dividend and trades at a PE, price to earnings, ladies and gentlemen, of 11. I'm not trying to promote you on British American Tobacco. I really love this company. It's one that I've recently been buying because it's on a major discount right now. Not to promote it too much here, I just wanted to show you a fun little metric, a fun little tool, including a big slap to the face to good old Ford for making fun of Tesla, as Tesla's coming back with a vengeance. So stay cool, stay awesome. I look forward to chatting to you real soon.